What's up, guys? Welcome to Joy of the Trade. On Monday morning, I sent out some notes to those of you guys that subscribe to my updates, forecasting the week. So we came into this week expecting bank earnings to open up, and they did. So I previewed that. I said it would be a mixed bag. I pointed out that Bank of America sold off hard last couple of times. Goldman beat by a lot the last time. And boom, guess what? Both things happened. Let's look at that in a minute. Another thing we talked about in my Monday morning notes, and again, I put that note out before the market opened on Monday, what I was previewing. I looked at CPI as a big thing that was coming out, the consumer price index. And I warned that if we saw too hot CPI, there could be some fireworks. We sure did have some fireworks. And Jay Powell. So let's look at all these things, but I'm going to share my screen and I'll talk some more through what we saw, what I got right, and what didn't exactly play out the way I thought it would. So first, let's look at these stocks. So Bank of America reported. They beat, and this is important because we have huge earnings coming out next week and the week after. You know, the financials kick off earnings season, really. But so these guys beat estimates by 34%, and the stock in the next trading session went down 2.5%. Look at Goldman here. Goldman beat by 48%, and the stock ended up trading lower by 1.2%. And so another thing I pointed out in the weekly notes in the beginning was it's really important to see how stocks react to the beats, because there's a lot of anticipation. There's a lot of hype going into these earnings. Earnings should be good. What do stocks do after they report? And they've been trading lower. So it's going to be interesting to see if that trend still plays out in the following earnings that come out. And I'll do this again next week. I'll preview the earnings next week, and we'll talk about what to look for in that as well. Let's look at what came out this week, though. So we had, if we go back to the beginning of the week, so we had this CPI. This CPI came out month over month. Look at this. They were expecting 0.5%. They got 0.9%. Okay, that was on the 13th. Keep that in your mind. The 13th, July 13th. This number came out. Year over year, 5.4%. So this was a CPI smashing, especially month over month, because they've been telling us for 5 months now that it's transitory. Now, every month, if you're going to be running at almost 1% clip, you're looking at double digit year over year when all is said and done, if that continues like that. So it's going to be hard to say transitory when, you're getting these insane moves. But what did stocks do? Let's look at the week. We know earnings came out. And so stocks, if we look at, let's just give it a couple of days here. Oh, not 2020. We want 2021. Yeah. So if we look at stocks this week, they came down a little bit. And then yesterday there was some more selling on the 15th, but then bounced. And then we're bouncing again. And the Nasdaq, let's look at the 10-year, which I thought, and this is the part that I got wrong. Frankly, you got to own when you get wrong. I thought that we'd be running hot. I was pretty right about the bank indices, the bank earnings, what they would do. But look at this yield. We got super hot inflation. Jerome Powell was the wild card. He came out the next day in Congress and was like, yeah, it's going to cool off. He's been saying that for months, by the way. Nah, I expect it to be okay. It's no big deal. No one's really complaining to me. People out there that can't find cars and can't feed their family steak dinners anymore. Nobody's complaining to me about it, so it's all good. Yields took a little bit of a quick move up on the 13th, just like I thought they would, but it wasn't sustained. So what I'm looking for next week is to see if we're going to break lower beneath this 125 level, or are we going to stay consolidating in this range, maybe go back into the mid 1.4s. That remains to be seen. But it's always a fun exercise to look at what you said own what you got right, own what you got wrong, more importantly, and learn from it. So the big takeaways I had this week: still have inflation, still have a Fed governor that doesn't give a you-know-what about having inflation and doesn't really plan to do much about it until he's forced to. The market has a great way of forcing people to do things, forcing people to have margin calls, kick out bad trades, forcing industries to go into oblivion. The market forces hands a lot. So we'll see what happens with that. And on the earnings front, you can beat by 33%, go down 2.5% today, the next day. And you can beat by 50% almost and be down 1%. So let's see what the rest of earnings brings. I'll have another Monday morning note, and then we'll see how I do next week. LFG guys, have a great weekend.